People are joining, Ben.
That's what they do. I had a small moment of panic, Roger. I was looking all over my house for my Holistiplan hoodie because I'd
Hmm.
hidden it away. I couldn't find it, and I started to panic.
Yeah,
Then I remembered where I put it, and I stopped panicking. It
that's
was in
good.
a different closet.
A different pile next to your bed.
That's exactly
Next to the
right.
other pile of clothes from last week.
Yeah, this is like the mildly dirty pile as opposed to the
I
like
see.
grossly dirty pile. But like I found it, and that's the most important thing.
Yeah.
I notice you're not wearing yours. Hmm.
Well, once I get the neck tattoo, I feel like then I'll always have it on display. A list of it.
That's good. Little Post Malone Jelly Roll
Never,
version of Roger Pine.
never lose that.
Oh my goodness.
What do you think?
I mean, I'm still seeing people
Yeah, people
filtering
joining.
in the back, so we'll give it maybe another minute or two. I mean, we had like 4 million people register,
It's quite a
so
few. It's over 1,000 actually. I
yeah,
will say this, like, we don't. This is kind of new for us, or haven't done it for a long time. Like a webinar devoted to a feature. You know what I mean? Like at best you'll get a janky YouTube video out of me. But lately we actually haven't even been doing a lot of that even. So I'm glad that we are trying to do a better job of showing people what's new
yeah,
product. I mean, so I appreciate the coaching from the rest of our team to kind of put this together because we wouldn't have done it ourselves. You know what I mean? Like, but I'm
no,
glad we're here.
absolutely.
So I appreciate people showing interest also in what we've got new in the product.
Yep.
So if y'all like stuff like this, let us know and we can try to do more. And if you think the YouTube channel needs more little quick hits on feature things, let us know because we obviously want to make sure that you get maximum value out of your investment in the product. And we're proud of the things we work on, obviously. So we seems like a win-win if we could just get it done.
Absolutely. So I think there's probably a good enough time to get started. I'm just going to hit
Mhm.
this just right off the bat. Everybody, we're recording this.
Yes, we are. This is being recorded.
It is being recorded. If you have to leave, we won't be offended. I mean, I will be offended. Roger doesn't care, but I'll be offended. But if you have to leave, like we will send a link with this video to everybody who registered. We record everything. So don't worry about it. We got this recorded. And with that out of the way, Roger, I think we can probably go ahead and officially get started.
Yeah. So we're rolling out, we're in the process of, in a beta rolling out a refreshed version of the tax report. We're calling it 2.0. I think this might be the third or fourth actual refresh we've done, but
Eh,
it's a major refresh. And I can just to go a little bit down memory lane. It's kind of a full circle moment for me to be doing this webinar with Ben because Ben was really the first person to see the prototype Holistiplan. And at the time, all we were was you could upload some information and you would get a bullet pointed list out. That's all it was. So like what is currently the observations or insights section of the report is all that we were. And Ben had the useful insight of, well, there's more information in these tax returns that you could bring to the fore. In fact, you could create a tax report if you wanted, if and so I don't, I like to think we would have gotten there eventually, figure that
sure.
out, but I
Yeah,
think it certainly put us on the right path a lot faster. And of course, the tax report is what initially made us famous. And I think I'm happy to see a new refreshed version of that coming out today. So yeah, why don't you jump into it however you want to, Ben?
all right, let's do that. I'm going to share my screen and we're actually going to start not just on, we're not going to jump right into it. We're actually going to continue this concept of memory lane
Mm,
because what we are looking at will be a memory soon, right? But this is the new, I'm sorry, this is the existing version of Holistiplan's tax report. We've got our key figures at the top, our marginal tax bracket information panel, modified adjusted gross income tiers, Medicare, itemized deduction summary. Hopefully people who are on this call have seen this over the last year to 4 years, depending on how long you've been with Holistiplan. So me showing this to you all is not new, right? When we've got our observations down below. All right, take a good look, everybody. All right, we're going to memorize this. We're going to memorialize this as a place and time. I'm going to push a button and we're going to jump right to tax report 2.0. So unfortunately, we wasted all of our special effects budget on an earlier webinar. So, there's no drum roll or anything. It's just
no.
me just me
Yeah.
pushing a button here, right? So here is Tax Report 2.0 for Peter and Paula Professor, some of our more popular sample clients. The first thing that you're going to see, key figures hasn't changed, right? So it's exactly the same, except it's prettier, right? So it's got, slightly brighter font, a little bit more clear. Um, Key figures is really the part of the tax report that we coach new users about, where we say, look, if you've got 2 minutes to get a really quick glance of somebody's tax situation, what are the most important things that you would need to know? It comes out of the gate with Holistiplan's default key figures, but Tax Report 2.0 does carry over a feature of 1.0, which is you can configure the key figures to whatever you want, right? So, Holistiplan's defaults are good, but if you want to be able to show different things that aren't in the defaults, the firm admins can do that by going to the customizations portion. And just be aware that when you do a customization of key figures, it goes into effect instantly, and it's across all of your tax reports, right? Across the whole firm. It is not just for that one particular tax report. What you put in there is going to be the way that it looks for everybody's tax report. So what is it? With Spider-Man, with great power comes great responsibility. Right, so be careful about what you do. One new part about the key figure section that is an addition to how we've changed some of the font and made the font a little bit bigger for those folks who like to use the enlarge font feature for people now like me who have trouble seeing things. When you've got the enlarged font, we noticed that when you kept things in a 3-column format, it introduced some less than desirable text wrapping features. So you can make this a 2-column table instead of a 3-column table, and hopefully that helps with some of the editing features there, or the appearance features of that. All right, so haven't really changed anything other than the ability to go 3 columns to 2 columns, made the font a little bit brighter, but here we go. We're going to scroll down. We're going to see our very first brand new feature, which is a breakdown of somebody's total tax bill. Right, so this is the total tax bill. This is a pie chart where we're saying, okay, your total taxes, this $25,233, is actually comprised of a couple of different components: tax on ordinary income, tax on long-term capital gains and qualified dividends, and then these folks have self-employment tax. So we're trying to break out these different things that actually make up total tax, and really driving the point home that taxes on just income alone isn't part of everybody's tax picture, right? Because that's not something that we describe really well in 1.0, even though it's definitely a component of it. And sometimes that leads to a few questions like, well, how did my tax bill get that high? I've only got this much income. Well, it's because you've got these other things that are added to it, right?
Yeah, the information was there, but just like in all different places. This brings it all together into one place.
Yep.
It's this is like your maximum zoomed out picture of your taxes, and then you can zoom in from here on the individual components.
That's right. And so, where else might we see something like this? Well, if we go to, this is just a different example, right? And be aware, like we're showing you, mock-ups here. This is actually somebody who's got AMT, but they've got, tax on ordinary income, self-employment tax, long-term capital gains, net investment income tax, and additional Medicare tax, right? All kind of rolling through together. So again, this is more of a panoply. I don't know if that's a word or not, but it sounds like it should be. Different components that all go into income taxes. Right, so that is definitely one new thing there. We're going to go back to our original panel here, and we're going to look through on this case now. This is an update, right? So the marginal tax brackets on ordinary income. This is an existing piece, right, on Tax Report 2.1, but we have modified it a little bit and tried to give a little bit more of a visual component to it. So what we do here is we still list the marginal brackets and then the income thresholds for each bracket, the amount of ordinary income, right? And again, ordinary income separate from capital gains and long-term capital gains and qualified dividends. So the amount of income that is in each bracket, and then the tax associated with that particular bucket of income. So you can start visualizing here that we're filling up these brackets as we get to higher and higher amounts of income. Total the ordinary income on in this column, and then total the tax on said ordinary income in this column. But then we've got a new visual component of it too, which is we've now stacked the brackets going vertically, was showing the breakpoints where the 10, 12, and 22% brackets start and stop, the amount of income that is in each bracket. And if you hover over it, you actually see the amount of tax associated with that bracket too. So trying to get a visual representation of filling up the brackets, and then also, how much more room visually do we have in this current bracket. Like you can sort of get to it in the panel on the left-hand side, but now we can actually see it right on the top, on the right-hand side.
I'm seeing in the chat, potentially we're getting questions about how to turn this on. We'll get to that at the end, folks. That's certainly, but yes, my colleagues are writing feverishly about how to turn this on and stuff like that. But just so you know, like we will cover that.
Yes, we will. We wanted to go through everything first before you
Yeah.
before he told you how to turn it on, but we will cover how you turn it on at the very end, I promise. So this is how this would look, for a standard tax situation. We also have an example of what this might look like in an AMT situation, right? Because AMT, technically you're working with different brackets. Actually, technically you're working with both, but if you are subject to AMT, you're paying the higher of the two, which is your AMT. So for these folks, we've made their AMT income such that they've filled the 26% bracket for AMT, and they are into the 28% bracket for AMT. So we're totaling their AMT income and then their tax on said income on this particular priority here. We've got some explanatory text that goes into what AMT is, right? This is actually not part of Tax Report 1.0. So we're trying to give a little bit more information about what what AMT is, but also showing, okay, here is what your AMT liability might have been and your standard tax liability and things like that, right? So trying to get to these things, right? Okay. Another element to this, on the first tax report, we've got the marginal brackets for both ordinary income and long-term capital gains and qualified dividends merged together in the same panel. Here, we've actually broken them up so that you're seeing a different panel for ordinary income and long-term capital gains and qualified dividends. And the reason we did this, sorry, I've got a co-host that had not registered for the webinar. So, hopefully this is super fun, Roger.
Yeah.
So what we're trying to help folks explain here, right? The marginal bracket story is, I won't say it's easy, but people are kind of more familiar with that, right? You have this amount of income that puts you in this bracket, although still people have the misconception that you pay all of your tax at your marginal bracket. We know that's not true, and that's kind of what we're trying to help people tell. The story that we're trying to tell in the long-term capital gains and qualified dividends bracket is a little bit more nuanced, but I think it's critical because this is still something that we get questions about all the time. And really the concept here is that when you're determining the tax rate for capital gains and qualified dividends, that income sits on top of ordinary income when you're coming up with your total taxable income. And it is actually taxable income that determines the rate that you pay on qualified dividends and long-term capital gains, right? And so that's what we're looking at in this particular section here. We've got taxable income of $179,081, combined $36,500 of long-term capital gains and qualified dividends. That puts them, this taxable income for these particular folks, puts them in the 15% rate for long-term capital gains and qualified dividends. And that's what you see visually displayed on the right-hand side. We've got the breakpoint on taxable income where the 0% bracket stops and the 15% bracket starts. And that's the lighter bluish section right here, well north of where that threshold is. So all of these folks, capital gains and qualified dividends would actually be taxed at 15%. If taxable income was lower, you might see a slightly lighter shade of blue under this threshold where you could start to say visually, here's how much was taxed at 0, here's how much was taxed at 15, and then if you were so lucky to have so much income, here's how much is actually taxed at 20, right? So again, trying to get that story, trying to tell that story, both to advisors, but also to end clients, right? About here's actually how you determine the taxability of long-term capital gains and qualified dividends and why you might have some in the 0 and some in the 15%. And also really now to tell the story about, okay, if this looks like this way this year, we might think about harvesting some additional capital gains because we had room in that 0% bucket to do so, right? So really trying to use last year's return to inform this year's return, right? So far, so good, Roger. Have I missed anything?
No, I love it. And I'll do a second call out. I mean, I talked about the story of how you kind of woke us up to the idea that we needed a tax report instead of just a bullet point list of stuff. The thing that was also in that communication with you that we missed until now is that who is the audience? And I think this is, I blame myself for not waking up to this earlier. We're 5 years in now, but like, who is the audience of the tax report? I mean, our DNA as a company was the advisor. And so we didn't have a lot of visualizations. And also, to be honest, I didn't have the ability to make pretty visualizations as our first coder on the payroll. But the reality is we need to think about the client as the audience, even though like we're building, even though our customers are advisors, like the client is the audience. And so the more we can explain these concepts in multiple ways, like the visual way may resonate with some clients, the chart, the updated chart with the new, that extra column on what you paid in each bracket may resonate. But that was DNA. Like we had to kind of change out our DNA because, and I blame myself for this. I kept thinking like advisor don't need this. The advisor knows how tax bracket works. But the reality is we need to make sure that we make the tax report accessible to advisors and clients because let's be honest, like advisors are putting this up on screen for clients to look at. So I appreciate you working on this for a number of years to finally get this over to the finish line where we're communicating these things in this better way.
Well, thank you. My cat takes full credit for all of that.
Yes. Yes.
Okay, let's keep going. So scrolling through, this is an update, so not a new feature, but an update where we're using the income from last year's return to inform what Medicare might look like for a Medicare eligible taxpayer, obviously, next year, right? So Medicare income surcharges work on this 2-year look back period. So your 2023 income informs your potential Medicare surcharges for 2025. What we've done is refashion this panel a little bit. It used to be where you could see either the amount of an income adjustment, so how much would be added to somebody's baseline premium, or you could see the total premium, and you could flip back and forth between the two by clicking on the Part B premium column. There's a little bit of an Easter egg, which made sense when we first rolled it out. We're like, yeah, everybody's going to know this Easter egg. But then, 3 years pass, and it's like, yeah, we have to tell everybody about this cool new Easter egg each
They
time.
missed
And
that
like,
one YouTube that we
yeah,
put out in
that's right.
2015. Yeah.
That one late Friday release. Hey, look at this Easter egg.
Well, we
So
just
that's
have more
gone.
room, right? I mean, like
Yeah.
by moving to taking the full width of the page, it gives us more room to give better information, right? We were so focused on being compact and like keep it all small, and that caused other printing problems. And like by giving ourselves room to breathe, we can actually put this information on screen. And I think it's also less visually overwhelming too. So I mean, it's just that one decision to go widthwise helped us put a lot more stuff on screen, but not in a way that overwhelms you, right?
Right. And so, yeah, we've got this panel here where you can see what your MAGI is for Medicare specific things, right? But we'll put it right here in the table too, highlight the bracket that you fall under, and then show your baseline premium, any adjustments, and then your total premium for Part B. Part D continues to be, we can only show you the adjustment since everybody's Part D premiums could be varied, right? It's not standard like Medicare Part B is, right? So we'll still be able to show the adjustment, but there'll be your plan premium plus the adjustment, the income related adjustment on Medicare.
I'll say that I've been surprised. I shouldn't have been because I've lived through it in my advisor days. Like when clients notice this, you did a big Roth conversion or something, they notice this big time.
Oh yeah.
Right. And I didn't anticipate how popular this information would be in our system, right? I mean, we're a tax system and this is sort of a tax adjacent, but this comes up all the time when I hear about how advisors are talking to their own clients, how they're using scenario analysis. So I'm just glad we've landed on having this information because I don't know, advisors who aren't bringing this up, I think you should, because I don't know, your clients are going to notice big time if you don't point it out to them in advance. And in some cases, you, the advisor, are the one who kicked them into a higher bracket, and you got to make sure they know it's coming. And it's
right.
like, oh yeah, it's worth it because we did this, and in the long run, you're better off XYZ. But anyway, I'm proud of this section because it's been very popular and I think very valuable to people.
Yep, absolutely. I'm gonna have to jump to another scenario here. We've got so many new components to this that we can't actually all put it all onto one singular report. So I'm just gonna jump to another sample report.
We can't put it all in one single report. Why? Just to clarify.
Because actually, I guess we could. I didn't. It seemed nonsensical to add Social Security to this sample person because they were not old enough to be collecting Social Security.
Right. So there's not a technical reason why we can't fit everything in a report. Ben's just saying that for some clients, some sections will be relevant to them and some won't. And so it's hard to construct a client where all the things are true. So that's why we have multiple tabs.
Thank you. Yep. So this tab just allows us to be able to show one of the other new panels, which is taxation of Social Security. And really what this should be, I mean, it is taxation of Social Security, but it's determining the taxability of how much of your Social Security benefit is taxable, right? That's a common slip where, every element of taxable Social Security is taxable, but not all of your benefits are subject to taxation, right? So sometimes people get tripped up when you use the rule of thumb, which we're actually going to show here, isn't always the best idea, but people might know that up to 85% of your benefit is taxable. That gets translated to my benefit is taxed at 85%. Right? That's not true, right? It's just of your total benefits, 85% of it is subject to taxation, not that it is taxed at a rate of 85%. But even just that rule of thumb isn't always true, right? It can be true for folks with higher income, right? And so maybe the common clients of most typical advisors have high enough income that somebody's Social Security benefit is always 85% of it is subject to taxation. But as you go down the income path, it's actually not a straightforward thing, right? It's not always 85%. It's actually sometimes a mixture of a little bit might be taxed at 0, and some might be taxed at 50, and some might be taxed at 85. And that whole calculation is actually really in the weeds. So we're trying to illustrate how it's not so straightforward without getting too technical. The way you determine taxability of Social Security benefits is actually arriving at something called either provisional income or combined income. It's actually referred to as both in the tax code for some silly reason, so we put both on here. So we determine what your actual provisional income is, where that theoretically lands you into the maximum amount of your benefits that might be subject to taxation, and then the breakdown of your total benefits, taxable percentage, and so on right here. So in these folks, we've got not all of their benefits, right? They're still got a little bit of room to go till 85% of them are subject to taxation, but it's really trying to drive this point home a little bit too, right? So that's brand new. We like that. That's brand new. Let's jump back to our first example here. So our Schedule A itemized deduction panel, this one isn't new, but it's updated. And the update, I think, is also going to be helpful in, again, telling a different element of the tax story, right? Because when I used to do a lot of the webinars for new users or explaining how these features worked, I'd always arrive at this concept of, well, what's the tax story you're trying to tell a client? Because every client's different, and the things that you're trying to get across are going to be different depending on that client's circumstances. The story that we want to get across here and looking at somebody's itemized deductions, right? So to the extent that somebody actually filed Schedule A, and they had greater itemized deductions than they did the standard deduction, is, well, how much of those were actually deductible, right? So here we've got pulled from the Schedule A, everything that would have been on this client's Schedule A return, totaled at $42,000 of itemized deductions, exceeded the standard deduction by $14,300. On the right-hand side, the ordering of these components of the bar chart is on purpose, right? So we actually start at the bottom with the things that you kind of had to pay that are eligible for a deduction, but you had to pay them. So things like state and local taxes, mortgage interest, if you have it, medical expenses, right? The worst kind of deduction, because usually it means something really bad's happened. So those are things you kind of had to pay, and they're eligible for a deduction, which is nice. But then we get to, the light blue here, which is what I'll call like a voluntary deduction, right? This is something you proactively decided to do. And these are your charitable deductions.
And something the advisor has some control over potentially based on the plan, right?
Right. The reason why we wanted to stack it this way and illustrate here, this is where the standard deduction is. Imagine a situation where only portions of this top blue part were over the standard deduction. Really, the story we're trying to drive here, at least as far as charitable donations are concerned, the only charitable donations that are truly deductible is any excess above the standard deduction, right? So if I did a $10,000 charitable donation and 5,000 of it was over the standard deduction and 5,000 was under the standard deduction, I really only get credit for $5,000 of that donation from a tax deduction point of view, right? And sometimes that story gets a little bit lost. So here we can actually help people visualize this. I'll throw this as an aside, for folks who are thinking about, large scale charitable donations for their clients now and next year. Just, bear in mind, we've got this whole Tax Cuts and Jobs Act thing that's set to sunset after next year. And so your charitable gifting strategy of bunching donations into a singular year may be something to be thoughtful of. If you want to review how the potential sunset of the Tax Cuts and Jobs Act might impact your clients, you can do that in scenario analysis, just a little teaser, right? So, you can change the calculation method for sunsetting out for projections starting in 2026 or later. But this is really a nice way of visualizing, well, how much of your benefit was actually, how much of your charitable donation was actually, deductible relative to the standard deduction, right? What's next? We did that one. Schedule B, this one we didn't really change all that much, right? We just made it horizontal instead of vertical so that we can see interest and dividends using the whole horizontal page. So still, this is one of my favorite sections. I always talk about this being where you put your Sherlock Holmes hat on and you're identifying accounts that maybe you didn't know about, or, large amounts of cash sitting at a bank that generated a lot of interest, unproductive assets or less productive assets. So we didn't change this too much other than just the horizontal layout instead of the vertical layout. Schedule D, we did a little bit more work on. Right. So Schedule D still is going to show you your short-term losses now on the left and long-term on the right. So again, getting away from the vertical pattern and using more of the horizontal layout. For folks who haven't been aware, for the last, I'll say like, I don't know, 6-7 months or so, we did expand the Schedule D section to be able to break out what I'll call realized gains or losses. So, stuff that was an actual sale of an asset, separate from mutual fund distributions, right? This was actually a user request where, they wanted to say like, hey, these are the ones I'm responsible for, but I have no control over mutual fund distribution. So can you highlight those? So you can actually see this in 1.0 now, but it maybe shows up a little bit better in 2.0. The total gains or losses will show on the left on this part. And then if there were any carry forward losses to 2024, they'd show up both the dollar amount, but also the nature, right? Short and long-term losses. So this by itself is just kind of a reformatting of what Schedule D on the current tax report looks like. I'm actually going to jump to, again, another version of this where we're going to show a little bit more. So in this case, we've got, a loss, we've got a gain. So it's going to still net out as a $55,000 long-term gain, but these folks have two new things. Now, Roger, you spent a lot of time on this section alone. I think like years of your life were taken off coming up with these particular things, but did you want to talk a little bit about, 1250 gains and collect other long-term capital gains?
Well, I mean,
You can say no.
for a second, my internet cut out and I was like excited that it would cut out permanently. Yeah, I mean, those are tough. Like the calculation's tough. It shows up on Schedule D. So, but the reality is they're taxed not necessarily as capital gains, in fact, at all, in fact. And they're taxed as ordinary income, but below certain thresholds. It's kind of a challenge to how do you represent it? And then also how do you split it out in a way that's useful to the advisor? So we elected to put it here because on the tax return, it's located there. I could see arguments for having this information up by ordinary income, but you got to choose one or the other. So that's where we put it, because the reality is Schedule D included some of these things. And again, just so you remember how it works, y'all watching, but like your collectibles and your 1250 gains are taxed as ordinary income up to a threshold, and then they're capped out. And so sometimes they'll show up in ordinary income, and sometimes they'll show up as this other tax that's kind of like its own thing, 25% or 28%. And so I don't know, it's not fun to figure it out, but the advisor who can explain it to a client is at a major advantage because it's a complicated thing that clients have probably never fully understood themselves.
Yep. So I think 1.0 doesn't go into even this level of detail, right?
I
How
think we
much?
I think we have
like
like a sentence in small print, like with an asterisk at the bottom of something. Yeah.
Yep. So we're trying to get across, here's how much of this type of income you had. Here's how it was taxed, right? Did it, top out a particular rate? If it didn't, here's, it actually was taxed as ordinary income.
Yeah.
Again, complicated concept, trying to make it simple, but acknowledging like sometimes those two things work cross purposes with each other.
It's looking like on the right-hand side, I guess the collectibles, in this
Well,
case, the
these folks are
collectible was,
AMT. These folks are in
of
AMT.
course, of
So
course.
yeah. So it actually is right, but it's because
Yeah.
these folks are
Because AMT
AMT.
caps out at 28%. All right,
That's
folks.
exactly right. Yep.
See, this is why sometimes this stuff isn't fun to build.
Yeah.
Yeah.
Or is fun, right? Depending on.
Depending on, yeah.
All right. So this is a brand new section, and actually somebody asked about this a little bit. I'm kind of keeping one eye on the Q&A. Somebody asked about, okay, in the Schedule B section, could you indicate, how much was ordinary dividends and how much was qualified dividends? And the answer is actually no, you can't do that in the Schedule B section, because if you ever look at Schedule B, it doesn't tell you on the dividend side how much is qualified or not coming from a particular source. Schedule B is just going to tell you the total amount of dividends that were coming from, Schwab or Vanguard or something like this. But the concept of tax efficiency of investment income was something we kind of sort of got at in a roundabout way in the key figures part, where we said, here's your breakout of qualified compared to non-qualified dividends, although even in the key figures, it just says, qualified compared to like your total dividends. We'll tell you if there's any tax exempt interest. In the default key figures, it says you had X amount of tax exempt interest. And then there's another row that says this is the percentage of your total interest that it reflects. That still is going to persist in tax report 2.0. And we do the breakout of short and long-term capital gains in the key figures. But the idea here is to now make it its own section so that we can talk to, if you wanted to, right, is your investment income organized in a way that is the most tax efficient. So for these folks, maybe it is, right? They've got way more qualified dividends compared to non-qualified dividends, right? Qualified dividends are preferential because they are taxed at lower rates. Interest, you're going to break out into taxable and tax exempt. This one's not actually as straightforward, right? Dividends and capital gains that break out of qualified, non-qualified, short-term, long-term, right? That's pretty easy and almost universal, right? Qualified and long-term is better than non-qualified and short-term from a tax rate perspective. Taxable and tax exempt interest isn't so straightforward, because whether or not that's a good idea for somebody is maybe a little bit dependent on some other factors,
Right.
particularly somebody's marginal bracket. So like somebody in the 10 or the 12% marginal bracket may actually be better off with taxable investment income if you're doing a fair, like apples to apples comparison, as opposed to the tax exempt income, because the tax exempt income is going to have a lower stated yield because it's built in that tax exempt nature of it. So you have to do, kind of a little bit of a tax equivalent yield comparison to determine whether one's better for the other or not. Roughly speaking, if you're at the extremes, very low brackets, taxable interest usually, not always, but usually is the better option if all you're focused on is how much do you get to keep right after taxes. And then at the higher brackets, tax exempt income usually tends to work out a little bit better. And then it kind of varies depending on what prevailing yields are at any of the brackets in between, right? Does that seem like an appropriate summary of that, Roger?
Yeah, I think so. It'll be interesting. I'll be interested in seeing how advisors use this new section, right? Because it does start to overlap with investment type conversations. And because there's so much nuance per client, it's probably just to let people know, you can show and hide these sections. So if for a given
Yes.
conversation, you're like, this is not a message I need to be having with this particular client, we'll get into some of the mechanics, but you'll be able to hide that section if it just isn't, if it doesn't add to the story you're trying to tell. Like Ben said, every time you're looking at this, there's certain things you are trying to highlight and certain things you aren't. It may or may not be something you're trying to show.
Yep, exactly. So Schedule C and E, the only difference we're going to make here, these folks only had Schedule C. These are now one panel across. So, Schedule C will show up on the left. Schedule E, if they have both, will show up on the right. If they only have one, I think we've made it so that if they only have one, like Schedule E is not going to be floating around out here on the right-hand side by itself. But then the persistence from 1.0, Schedule C will still be able to tell you the name of the business or the entity as well as the net profit. Schedule E will still be able to show you the name of the rental property or the trust or the estate or the S Corp or whatever, how it's listed on Schedule E, but we're still not going to be able to show you the income that particular entity generated. And that just gets back to, if we said every time we started showing these things, Schedule E is just wonky. Right? It's just not as easy to be able to pull this information and present it in an understandable way as it is for Schedule C. So still be able to show you the name, but I'm not going to be able to show you the income that particular one generated. Right?
And it's still valuable because I remember especially like new clients I've had where they have some limited partnership thing that a previous advisor sold them, and that's the sort of stuff that shows up on Schedule E, right? And so those are just like on the Schedule B conversation. It brings forward some conversations that you might otherwise miss.
Yep. I'm going to have to jump to a different one because in this one we've got, so this is a new panel. When we were trying to think about ways that we could tell a more visual story, we're starting to look for some of those taxes or tax calculations that lend themselves well to a chart. The net investment income tax, or the NIT, is one of those. So super fun, right, to try to explain this to somebody. What is the net investment income tax? Well, it's a 3.8% tax that's applied to the lesser of investment income or the amount that you're over the threshold, right? That makes perfect sense. So here, what we're trying to do both in tabular and in chart format is walk through how you get there, right? So this is a married filing joint couple. So they've got modified adjusted gross income for NIT purposes of about $430,000. That's the threshold that they've got to be where the NIT kicks in. Here is their actual net investment income. So one thing that sometimes people get tripped up about this. It's not just being over the MAGI threshold, but you also have to have investment income. Like if you're over the threshold, but you have no investment income, there's no tax because technically zero is the lesser of those two things. But in this case, these folks had $141,000 of net investment income. We don't show the math, but you can eyeball that's going to be the lesser of those two. So we show lesser of net investment income or MAGI in excess. That's our $141,000. And then there's our tax. And here we're showing it on the right-hand side, right? Net investment income is going to be the light blue. Everything else is the dark blue. Here's the threshold where it would kick in. And we can see that in this case, the net investment income is actually lower than the total amount that's over the threshold. And that's the amount that's taxed at 3.8%. Right. Again, you can hide this if you want to, but this is just another tool in your toolkit if you felt that this was an important or helpful story to tell your clients.
It's just another example of a thing. Clients don't understand this. I mean, half the days of the week, I don't understand this. So like, it's another way for us to just show, we advisors to show we know what we're talking about, especially since this has to do with investments, which is probably why a client's talking with you also. Just trying to demystify some of these concepts in a way that they understand is valuable, right? So
Absolutely.
we're doing our best to help you do that.
Yep. The next one, we're almost done on our tour here, guys, so stay with us. One of the more popular panels on Tax Report 1.0 is the panel where we tell you indirectly, stop trying to memorize everything and let software do its job, which is all the different things that are triggered or governed by modified adjusted gross income, right? So not just adjusted gross income, that's easy, right? That's a number that shows up on the tax return and it's pretty straightforward, but modified adjusted gross income. I think the panel actually shows 6, but if you include Medicare, IRMA surcharges, it's a 7th one, and there may be more, but there are multiple definitions of modified adjusted gross income. They don't always all come out to the same amount. The concept of modified adjusted gross income is embedded in the name. It's AGI modified somehow, right? So adding things back in or subtracting things back out to maybe come at a new number. So what we've done here is taken the concept of the table in Tax Report 1.0, where we said, don't worry about memorizing them all. We're going to calculate it for you, tell you if your client was over, under, or in a phase out range if one applied for any of these planning considerations, right? So it could be a tax, it could be a deduction, it could be the ability to make a contribution, what have you. What we've done here is organize that a little bit better. So instead of being a hodgepodge of, oh yeah, here's this other thing that we've learned about, and let's throw it in at the bottom of the table. And here's another thing that we learned about, and we should add that to the bottom of the table too. Organizing it by those that share a common definition, right? So just using as an example, this MAGI definition 1, all of these considerations share a common calculation for how you arrive at MAGI. Now they're different things, right? But they all share that you all get to the MAGI the same way. And again, in our concept of let's stop making life harder for everybody by remembering all the Easter eggs that we put in, we stripped out the Easter egg for the MAGI table where you could click back and forth between determining if somebody was over, under, or in the phase out range, or seeing the actual MAGI itself. And we've got the MAGI here. This is the actual calculated MAGI for all of these things, still consistently being able to show over, under, and still, again, with the ability to hide certain things that, again, do not fit well with the tax story that you want to tell. I always love this example because this is the one that trips me up every time, or trips up a lot of people. Really, it's the Roth IRA contribution one. Now, this sample client, they did a Roth conversion in the previous year. So if you see, like, their AGI is actually a little bit different than everybody else's, because when you're looking at the ability to contribute to a Roth, you're supposed to subtract out any taxable Roth conversions. So these folks, if all you looked at was their AGI and you knew the phase out range, you might have said, they can't contribute to a Roth. The reality is that they can, right? Because you have to strip out that conversion piece. So here we're telling you, you can still do a phased, maybe not a full contribution, but a phased contribution to a Roth IRA. So I love this example. I always get a kick out of this one. We did add one new thing. This is not in 1.0, but in 2.0, we've got the ACA premium credit. So the MAGI definition for that. So we'll actually tell you the modified adjusted gross income for ACA purposes, as well as the percentage of the federal poverty limit that it represents, right? So this is a new element to the table. This is something folks have asked about for a long time, and we kind of struggled with, like, okay, it doesn't really fit well with the over under phase out concept of everything else, but we figured out a way to at least add it here and show the percentage of the federal poverty limit that their income reflects. Now, again, you might not want to see any of these, or certain ones of these. You might not want to see all of them. If you don't want to see any of them, you can hide all items here, and they're all going to hide, and then you can selectively pick the specific ones that you might want to add, again, consistent with this client situation. All right, you could also hide all of them here. If you want the formulas to show, we know there are some folks who say, I've got to be able to see how you came up with the number. You can do that. So here we got them all shown. You can hide them individually, or you can hide them all at once if you want to, right? The last piece then, and somebody asked a question about this, and we've got it here now. We actually used to get this question a lot. I guess we still do. The key figures would show you deductions, but it really just be like the standard of the itemized deduction, and it would show you the total amount of credits, but it wouldn't have any color to it. So now the panel that we've got before you hit the observation section is deductions on the left-hand side, where deductions reduce what you're taxed on, right? So it reduces the amount that you're actually subject to taxes, versus credits on the right, which actually reduce your tax bill dollar for dollar. So we've got our deductions here, including not just Schedule A deductions, right? So our state and local taxes, mortgage and investment interest and gifts to charity, but also Schedule 1 or above the line deductions for the deductible part of self-employment tax, as well as the qualified business income deduction, right? So these are the sum total of all of the deductions, itemized deductions, plus Schedule 1, plus the QBI deduction if it applies. And then on the right, we've got the specific credit that somebody claimed, as well as the type. So if you want to have that story of, non-refundable versus a refundable credit, you can have that section now, right? So that's going to be our new tour. I'm just going to end this before we, open it up to the folks who are monitoring the chat if there's anything specific that we wanted to talk to, with a couple of important things. One, how do I turn it on, right? Well, I'm glad you asked. If you navigate to settings, security settings for your firm, the very first thing that you'll see under firm preferences is tax report 2.0 beta. So you just have to turn that on and you will be able to opt in, and then you can actually have access to 2.0. The second thing that I will add is it specifically says beta, right? We are still considering this in beta. So please send us your feedback. We know it's probably not, what I'll say, perfect. We think we're pretty proud of it, but one of the things that has been consistent with the Holistic Plan community is that you have fantastic ideas and you are not shy about sharing them. So we would encourage you to do the same
Not shy
here.
about sharing the bad ideas too, but
Yeah,
we also get very good. We've built the product on the good ideas of our customers for sure.
absolutely. Right. So, we it's a little cheesy, but one of the taglines we'll always say when somebody gives us feedback is Holistic Plan was founded by 2 advisors, but built by over 30,000 users, right?
Mm-hmm.
So, your feedback went a long way into what Tax Report 1.0 evolved to. We're expecting you to give us some awesome feedback and some constructive feedback about what 2.0 might look like. So be aware, like, this is still very much in beta. Doesn't mean you can't use it or you shouldn't use it. You should, but please send us your feedback. I will say we can't incorporate everything that everybody wants, right? We will do our best. We will call the things out. And if we see something come up, more and more and more and more, obviously there's a demand for it. There are sometimes some limitations about what we can do on a technical basis. So if we don't do something, it's not because we don't like you. Sometimes it's just like we just can't do it, right? Or we'd love to be able to do it, but we're just not quite sure how to do it in a way that makes it applicable across the entire user base. But yes, send us those pieces of feedback. One piece that we know we have already heard is that, like, some of the color formatting on the pie charts doesn't always show up as well as we'd like. We've heard you loud and clear. We are looking at different frameworks for the pie chart so that it all just doesn't represent like one slightly different shade of dark blue. Right. So that's the sort of stuff we want to hear. If stuff's not working the right way, let us know. We want to be able to fix it and make it work the way that it's supposed to. For the time being, you can still switch back. Even if you turn on 2.0, you don't have to use it, right? You can switch back and forth between 1.0 and 2.0. You can click to make sure that 2.0 is your default. You can reset to 1.0 being your default. So, go ahead and use that and test it that way. But, please let us know what's working and what's not, and where we still have some room to grow. Just from a timing point of view, our goal is to remove the beta flag from from 2.0. I think our goal, we said, was by the end of October. So it's still going to have the beta flag on it. You know, Holistic Plan has historically sometimes carried the beta flag longer than its expiration date. But the goal is to keep the beta flag on until the end of October. But we will not be able to run 1.0 and 2.0 simultaneously forever. The concept of that sent our chief technology officer into like a 7-day coma. And so, you know, our plan is to, and this is actually not just our plan, this is what we're going to do. We are going to sunset out 1.0 at the end of the year, right? So we want to give people time to get used to it. We know many of you are going to have returns that were filed on extension, and you're not quite ready to jump to something brand new for folks where you're doing these reviews of their returns that you're getting, like, you know, in the next, like now, like through the next few weeks. So you'll still be able to jump back and forth between 1.0 and 2.0 for the rest of 2024, but come January 1, 2025, it's going to be 2.0 going forward, right? Roger, that's a lot.
Yeah, we had some
Cool.
questions. You want to hit some of them?
Let's do it. So Madeline, Carey, folks who are running the chat Q&A, was there anything that we wanted to bring with the knowledge that we're working without a net here? And I'm going to be sad if we disappoint somebody with a negative.
Some of the things here are kind of product suggestions. And so I think those are, yes, definitely send those our way. I'm trying to hit the ones that are kind of questions, not to discount the product suggestions, but those are ones we can handle one-on-one.
Ben, will you hover over where the presentation mode is? Some folks are asking about that and wanting to make sure it's still there, and it is. Just wanted to point it out.
Yep. So actually, that's a good point. So yes, presentation mode still exists. So if we clicked on presentation mode here, we'd get rid of all the other stuff that's in the background. Turn off presentation mode is going to be in the right-hand side. The manage sections, so I'm actually glad you asked this. So manage sections, you can still move these things around if you want to. You can hide whole sections outright if you want to. You know, we actually had a good piece of feedback from one of our users that said, even though there's no data in that section, I still sometimes like showing it because it might help guide conversations about you know, realization of capital gains this year. So like if a return doesn't have any qualified dividends or long-term capital gains, at first we weren't showing the panel that broke out, you know, long-term capital gains and qualified dividends because there was nothing to populate it. But the user there said, actually show it anyway, because that way I can talk to it for planning purposes for this year. So there are some where even though there's no data to populate it, like it's empty, you can still put it into the report. So you could talk to it if you wanted to. That's not always going to work for certain sections, right? Sometimes you kind of need data to have something there to talk to, but you know, we've restricted the rule that we had where if there's no data, don't even let anybody see the section at all, right? So that was a great piece of feedback and one that we were able to turn around pretty quickly.
Ben, I'm going to be vulnerable for a second.
Oh boy.
Is the ability to edit the title, is that new to 2.0 or did we have that in 1 as well?
You actually have the ability in 1.0, right, to click on the pencil icon.
Shows
so
what I know about this stuff.
Yeah, well, I mean, it's only your company, but so if you wanted to do this, you could click the pencil icon and change it if you wanted to. You know, we've retained too the ability. I think this is a relatively new thing on 1.0, but you know, the advisor's name and the email address, and you know, these ones got generated out of a scenario. So if you do a tax report out of a scenario, we'll also show you the name that you've attached to that particular scenario.
Nice.
What else?
Looking through the questions here.
And a one-off question, but I guess it wasn't one-off, there were a few, but they were asking about scenarios. Will this show up for scenarios? And the answer is yes.
Yep. The answer is yes.
Yep. Those of you who are putting questions in here that are kind of product suggestions, we will capture all this. This won't be lost. I'm just seeing that's like a lot of these things. Ben, one smart aleck wrote, casualty and theft losses are voluntary deduction. Did you say that they were voluntary? I guess
I didn't specifically say that, but I might have intimated that.
I try to bunch all my casualty and theft deductions into alternating years. All right, fair enough.
Yes.
That was a funny question. I don't know, Ben. I'm scrolling through some of these things.
Yeah, so a couple of things, and I'm just eyeballing a couple. Some folks have asked, can you add state taxes? And the answer is, well, no, because we're not reading in state tax returns. So, for an uploaded return, we couldn't add state taxes anyway. We have debated the ability to put state tax related things that have come from a scenario into the tax report. The challenge is that it kind of mucks things up a little bit. So we're still struggling with the right way to do that would still give it a consistent look and feel. But know that, we have heard that suggestion. We're just not quite sure the best way to implement that. I think a couple of other people have asked about, like, well, can you add FICA? And again, we can't do that for an uploaded return because the piece of information that you need actually isn't on the return, right? You need to know Medicare and Social Security wages to calculate FICA. And the return really just shows you taxable wages. Now, one of the newer updates that we've got, again, in the scenario analysis tool that this webinar isn't dedicated to, but we actually are working on the ability to demonstrate FICA within scenario analysis, which we would then, I believe, be able to push to the key figures box, should you want it, for a tax report that was generated by a scenario. So
and
we've heard
that'll
that
make life
suggestion.
easier on Form 8959 for additional Medicare tax as well, since that uses Medicare wages.
That's right.
So yeah, in the works, on the wish list.
Yep. Okay. Is there anything else, Madeline? You've had the best opportunity to kind of cull through the Q&A. Anything else as we're kind of winding down here with our allotted time? And I don't know about you all, but where I live, it's gray and rainy outside, and it's just screaming 10-minute power nap. But that's just me.
Too bad.
I know.
Nothing that I can see right now.
Okay. Well, again, appreciate everybody joining us on this webinar. Please do take advantage, turn this on, let us know what you think, give us the feedback. We're collecting it all. We'll act on what we can act on. But appreciate you taking some time out of your day to spend some time. And Roger, thank you for taking some time out of your day.
I learned a few things, so I appreciate going through this stuff. It was great.
Absolutely. Well, thank you, everybody. Appreciate seeing you. And, I think we saw some feedback that this sort of thing was valuable. So we'll try to find some other stuff like this where we can share and enlighten and give light to everybody's Friday afternoons in the future.
Sure. Yeah.
All right. Thank you, everybody.
Thanks, Joe.